This week, I'm still at the in-laws. We're waiting for our house to get finished, and I'm having to sit out here and do my work. It's really crappy. Check out this view. Isn't that amazing? My in-laws went to England or Scotland. Sorry, they went to Scotland for this summer for 5 weeks, and they gave us the house to live in because we're waiting for our house to get built. Anyways, so this is my new location. Not bad for a little office, is it? So what I was doing is I just finished off a full day of coaching calls with my CPA firm clients from around North America. And I was coming up with a topic for this video blog, and it's going to be the 3 pricing mistakes that I see accounting firms making in 2022. Now, normally when I shoot these videos, it's all about stop billing by the hour, move to value pricing, and it's that whole shift here. I'm not going to do that this time because I'm just going to talk directly to those firms who are actually pricing their value pricing already. And I want to talk to those firms and say, here's where the biggest mistakes that I see that are happening right now. And there's 3 of them. They're really big. And the first one is that there's not a minimum. They're not setting a minimum number per client. And so what happens is that you think, okay, I'll get this client for $500 a month, let's say. So it's going to be $6,000 a year. So it's $500 a month. But then you get another client, you're like, oh, well, maybe this one, I could probably value price it at $325 a month, or, something like that, $350 a month. And what happens is that they haven't set a minimum. And this, you have to have a minimum price. You have to have a minimum price because what happens is if you go down below a minimum price, you end up destroying your business model. And so I see too many firms out there that do not have a floor. They need a minimum to ensure that they have got the proper profitability, which moves me into mistake number 2. Mistake number 2 is, which feeds in from 1, the reason why they don't have a minimum is because they've never modeled out their pricing in their accounting practice. So it's really simple. Every accounting firm that I work with, I start with a vision of where they want to be. So there are 3 freedoms: money, clients, time. What does it look like? Let's paint a new vision. And I give them that ability to really paint this incredible picture. And it's a lot better than you think it could be. And so we paint that vision, and then we say, okay, that's where we want to get to. Where are we now? How do we get there? And with that painted vision, we always paint out the business model. What is the business model going to look like? So I start with the 3 freedoms: money, clients, and time. How much money do you want to make? I start with that first. Start with how much money you want to make. Then what you do is you reverse engineer it to say, well, to make that kind of money, I need X amount of, and I want to have a certain number of clients and a certain amount of free time. So we start with that as a premise, then we work backwards. So you need a certain amount of clients at a certain price point to give you a revenue model, and then you need to bring in an expense model to service that. What kicks out is your net income. So you start with the net income in mind and work backwards. And so if you do that, you'll see how small drops in minimum pricing will destroy your business model. Literally, I was doing, we did a business model on this one, and we always track it every month or every call that we have. And I do 2 coaching calls a month, and we check it and we track what we're doing. It's the ASF tracker, I call it. And literally on this one, we had a $4 drop in average price per client. And from a projection or where we want to go in our future, like this beautiful future that we want to get to, with a drop of $4, average of $4, it took $8,500 off the table. I've seen changes as like $25 averages knock off like $100,000 off the model. It's insane. You need a minimum. You need to model it out. And so then this comes to the third biggest mistake that I see happening with firms, is that they don't run their pricing by a CVO. And I call the CVO as a Chief Valuation Officer. Or in the case of my coaching clients, it's run it by Eric, okay? Run it by Eric. The world's greatest value pricers out there, Ron Baker and Paul Dunn, the two leading fathers, shall we call it, of value pricing, have both told me separately that each of them would value price the other person higher than they would themselves. So in other words, Ron would pick a price of, say, it's this job is $50,000, and Paul would come in and say, no, Ron, it's not 50, it's 75,000 for you. And the opposite is the same. Okay, these are the world's leading knowledgeable people on value pricing, and they themselves would undervalue themselves. So third mistake that I'm seeing is that you're not running by your value pricing through a chief valuation officer, having someone who's a third party that can look at it and say, you know what, you got the number wrong here. Literally, I just had a coaching call today where they were thinking, okay, well, the price is a change order. It was around 150. He was thinking, it's about 75,000 what he was thinking for the change order. I was like, no. It's 150. It's 150 all day long. I've had these conversations with clients over and over again. They've thought the price was 15,000 a month. We moved it to 25,000 a month. And if those numbers are scaring you and they're not the numbers that you're normally looking at, literally it is a change from a quick phone call with Eric moves from, instead of a $500 a month client, you go to $750 a month client, and it changes everything in your model. So those are the three biggest mistakes that I see that firms are making in 2022. And again, firms that are value pricing, the three mistakes are, number one, you don't have a minimum. You need to have a minimum. Say you do not go below that, do not stop loss. That's it. Number two, you know that because you've modeled it out in your practice. You've actually can project it and say, this is where my future is going. This is where I want everything to happen. And so you've modeled it out. And then number three is that the other mistake is that they don't have anybody to run it by to make sure that they're getting the maximum price. A chief valuation officer, CVO, it's a new C-level person. So there you go. So I'm going to sit here and finish up this video, look at that wonderful view, and remind you that if you think the Accountant Success Formula coaching program might be a right fit, I'm more than happy to have a conversation. Would love to have a conversation to see if it's good, because I just see so many accountants out there losing their freedoms. And again, these are the three freedoms I want for you: is money, clients, and time. I want you to make great money, have super clients that appreciate you and pay you higher prices, and give you free time away from your accounting practice. So there you go. I'm Eric Solbakken, reminding you that when you take back control of your business model, you can take back control of your life. Stay tuned for more success tips to come.